Good morning, and thanks so much for tuning into the trade setup. It's a packed global news flow day, both what has happened and what will happen. So first the China news flow and geopolitics right at the center of it. So China has warned of a strong, quote unquote, strong reaction if EU sanctions its companies. This is on the wake of the EU saying that China is supplying equipment to Russia, which is both used for civilian and defense purposes, which is against the principles of what's happening between Russia and Ukraine. China has ordered the Canadian diplomat to leave in tit for tat move. Remember, yesterday I spoke about how Canada has asked one of the Chinese diplomats to leave Canada on some espionage issues. Italy intends to exit China's Belt and Road Pact as the relations sour between the two nations. Remember, it was one of the few, or probably the only European nation which had agreed to the Belt and Road Initiative. And something is a big geopolitical move from China's, and as everybody would know. And now apparently Italy is intending to exit under the new government. So that's the big China news flow, geopolitics, and relations souring with multiple nations. Remember, S. Jaishankar 3 days back had said that relations with China are not normal when it comes to India as well. In other key news from a market's perspective, Wall Street on debt ceiling alert as the key 7-day window begins. This is a big thing. Something tells me that it will have to get resolved for US's sake, and therefore the US citizens, no matter which side they are, will probably do something about it. But who knows? I'm not as much of a US politics expert as anybody as as some others might be. Biden and McCarthy, though, have vowed more debt limit talks as the US default looms. Oil has held a 3-day surge on SPR refill plan as well as the Canada disruption. And in other news, Israel is going to allow entry of 42,000 foreign workers from India, and which is uh, an interesting thing. Now, from a market's perspective, US equities fell in yesterday's session. The debt ceiling impasse has reached the next level. Like I said, Kevin McCarthy rejected the possibility, but they've spoken about some bit of an extension or conversations between Joe Biden and them. Now, the focus, of course, in today's session shifts now to the inflation print for April. The headline month-on-month reading is forecast to bounce, by the way, remember, viewers, while the core numbers are expected to match the March figures. If it is slightly more adverse, then the beliefs about an extended US pause might harden, or maybe even strengthening might harden, which might be negative for equity markets. And that's why I think if you look at the SGX Nifty currently as well, it probably would be showing a flattish to a marginal downtick in the session today. I really doubt that ahead of the US CPI print numbers today, Asia, Europe, or the US markets will really make a large move. So expect a bit of a flattish move in the session today, maybe with a bit of a downward bias. And frankly, the trade setup, now the trade setup comes up for you next. I would reckon, one that we saw that banks dragged the indices lower on a day of a sharp pullback from highs. We haven't usually seen this happen. Yesterday was amongst the few days that we've seen that happen. And I would reckon that risk aversion is likely the preferred theme ahead of the US CPI numbers today. What is good is that the continued FI support, which is a big positive. Yesterday too, I think there was buying of some 1,900 crores. The based on whatever little I understand of the screen, and I may be wrong here, but you can see these flows likely going in the tech space as well as the cap good stocks. It's certainly not going into banks. We're starting to see that risk aversion in banks, and not that FIs were buying into PSU banks, which are the main culprits, but even on the private side, there's no stellar move out there, but you're consistently seeing tech kind of holding out. When you speak to dealing rooms, on and off, there are some murmurs of flows into some of the tech stocks. So tech is probably the place that we're seeing some bit of buying happening. Is it? I mean, can it really shoot up? Who knows? But it seems to be from the screen that that is what is happening. Clutch of results today. I thought L&T and Dr. Reddy's as well as GCPL amongst the important ones, but we also have Gujarat Gas, which is important, especially after what Mahanagar Gas has done. Relaxo Footwear has had an abysmal last few months or quarters. Can it actually change the course in quarter four? Remains to be seen. There is also Escorts, which will be an important one. Bosch, which will be an important one. And amongst pharmaceuticals, Novartis and Orchid Pharma as well, important ones to track. Now, stocks to watch in the session today. A lot of result boys, but I'm starting off with the non-result one. Now, last night, rather post midnight, at about 2:30 a.m. or thereabout, there's some announcement that has come in on Bloomberg, which says that Fairfax India has entered into an agreement to acquire an additional 3% equity interest in Bangalore International Airport from Siemens Project Ventures for about $75 million. My suspicion is that this should augur well for players in the airport space. So GMR Infra for sure, which operates the GMR airports, and Adani Enterprises by virtue of it having the airport subsidiary. So airports is not really the biggest thing in Adani Ent, but it should probably help both of these. So watch out for the airport players. Just one standard disclaimer: Adani Enterprises owns 49% stake in Quintillion Business Media, which is the owner of BQ Prime, which is the platform on which you are watching this trade setup. So watch out for GMR Infra and Adani Enterprises. Apollo Tires. Now, optically, the numbers look fabulous. Revenues up 12%, which is fine, in line with estimates, 6247. But look at the below the revenue numbers. EBITDA, 59% uptick, 998. The expectations for 919. EBITDA margin, 16% versus 11.23%, and this is estimates of 14.8%. Big beat there. Net profit up to 76%, 427. The estimates for 315. The only pickle, viewers, is that now this is not news. After what MRF did and what CF did, most people anticipated Apollo 2 to do well. Some would argue that the beat in Apollo is not as strong as the beat that a CF or a MRF did. So in that sense, could it be a dampener? I doubt though, because the numbers seem good, and I would reckon that the positive traction that we've seen in the tire companies likely continues. So do watch out for Apollo Tires today, but tire as a space seems to be interestingly poised. Never mind the 3-day uptick in crude for now, but it seems to be interestingly poised. Then Lupin, decent because pharma is one in traction. And I thought the numbers were okay. Up 14% at 4430 crores. EBITDA up 165% at 604. The estimates were 491. EBITDA margin at 13.6% versus 5.86. Big beat, right? Imagine the expectations were 11.1%. So big beat there. So that is also an interesting one to focus on, the margin performance from Lupin. Net profit at 235, loss of 517. The Bloomberg estimates were 307 crores. So on that net profit front, you could argue that maybe this thing, but better USD to IRR conversion, higher EMEA and API sales, all of these help Lupin. I'm trying to see what else that I missed in Lupin per se. But the free cash flow numbers, as the analysis suggests, right? You subtract the acquisition cost and capex and company acquisitions, the FCF was still higher than anticipated as per the analysis that I have with me. You would argue that pretty strong numbers given by Lupin, and the valuations are reasonable. So I would suspect that Lupin could actually have a decent outing in the session today. Do watch out for that one. Then Nuvoco Vistas, you expect most of the companies in this space to do well. The revenues were a bit of a letdown, really, but I mean, you could argue that they were not too off, yeah, but about 170 odd crores off, 160 odd crores off from the estimates. But EBITDA margin performance in line. Volume, EBITDA per ton were in line, but revenue and realization both were below estimates. Net profit numbers, though, based on what was estimated, and I don't know how those estimates came about, but there's a sharp surge in the net profit estimates for Nuvoco Vistas. So that is something to watch out for as well. So, I mean, decent numbers. You have to agree that net it gave a good one on the bottom line front, but on the acquisition front, on the revenue front, not that great. Deferred tax assets adjustment worth 600 crores helps Nuvoco Vistas come in on the bottom line front, post better than estimates. But volume, EBITDA per ton, all in line, and revenue and realizations were below estimates. I would suspect that Nuvoco could have a tough outing in the session today. Compared to what everybody else has done as well, not the best. Birla Corp, revenues up 8.7%, 2397 crores was the estimate. The revenue slightly higher. EBITDA margin in line. Net profit 84 crores. The estimates were 54 crores. EBITDA per ton and adjusted PAT are all below what the street was estimating, or maybe EBITDA margin largely in line, but EBITDA per ton certainly below estimates. Then what else is below estimates? Well, Godrej Agroware, not the best of numbers at all. Revenues flattish, 2094 crores. Estimates were 2202. EBITDA margin 3.56 versus 8.13. Estimates were 5.7, much lower than corresponding quarter, much lower than estimates either, which were anyways lower. Net profit 31 crores. Bloomberg estimates about 56 crores. So a bit of a howler of a quarter for Godrej Agrovet. I would suspect that a negative reaction there. Castrol, much lower than estimated, especially the bottom line numbers. EBITDA margins too, about 100 basis points lower than estimated. Revenue front, yeah, about 100 odd crores on that base, about 5% lower. Yep, so lower than estimates on that front too. So not the best quarter either for there. Then some other numbers, Poly Medicure, the margins seemed okay actually, 27.9%. The Bloomberg estimates was 24.6, and Nazara seemed the howler of a quarter really. Q4 PAT down 84% at 2.6 crores. The Bloomberg estimate was 16 crores. It was a big miss. The softer revival in Kidopia and the loss of AgTech client certainly impacted growth. Now, did I miss out some other numbers just before I get on to one brokerage recommendation that I have for you today? Smaller forging companies like Balu Forge, for example, I thought did well. So that could be standing out. Kilburn Engineering actually did really well for itself. So that's the other one to watch out for. Both decent numbers and not the most expensive valuations. TD Power, good result. It's certainly not an inexpensive stock, so that's the problem. But I think the weaker numbers stand out today, right? Aside of the ones that I've mentioned, there's KSB, there's which didn't do well. Rain Industries didn't have the best of quarters either. I already spoke about Nuvoco, as I said. I thought Birla Corp wasn't the best either. So there are a few which kind of not stood out. And in line with the fact that there is one, the US CPI numbers coming out later today. Karnataka goes to voting, and I think everybody will be on the seat's edge as the results come out only over the weekend, and therefore you can react only on Monday. And considering the fact that there are a bunch of opinion polls that I've seen which are pointing towards a mixed result and not certainly something that the markets would necessarily like, you would expect that while there will not be a large, long-lasting reaction, would the markets be wary of what could happen as a market reaction and therefore kind of stay on the sidelines, not be too aggressive? I would suspect that could well be the case. There's a recommendation that has come in from MK on Page Industries on the short side. I thought I should bring it to you. They're saying that the stock had risen on short covering since the last 1 month, their analysis. Price change of 13%, OI change of minus 11%. They're now seeing the stock revert from its 200-day EMA, 41762, to close at 41362. They believe there's a short trade from these levels, which looks attractive for a target of 39,800. I urge viewers, please do your own due diligence before you trade into any of the recommendations that come, not just here on any platform whatsoever. But yeah, I mean, they do a very interesting alternative analysis or an alternative team that does that. And therefore, because this came in, I thought I should bring it to you. Before we wrap up, viewers, and we'll of course tell you about some things that will be lined up today. Okay, yeah, let's do that. So, and then I'll maybe give you a couple of recommendations too. But Atul Suri, and important to get him on to talk about how is he spotting some trends. There is Castrol at 10:30. You want to tune in for that. Stocks in Focus with Rahul Shah. Rajinder Gogri of RT Industries joins in at 11:30 a.m. So that is something to watch out for. Nitish Mitrasen of Nazara after not the best of quarters at 12:20. Mahanagar Gas, very important conversation. And Anshu Singhal of NGL after the blowout gains yesterday. We'll be talking to my colleague Sajid Mangat. And of course, the mutual fund show with Juzair Gabajiwala of Ventura will be something that you might want to tune in for as well. There is a downgrade on Dabur, so that is to be watched out for. An upgrade of Siemens to be watched out for. MGL, like I said, everybody's raised prices, so that is something to be focusing on as well. So a clutch of stocks that could be interesting to focus on in the session today, aside of all the result reactions that are to be anticipated, and the airport companies on the back of what Fairfax has announced late last night. Thanks so much for tuning into the Trade Setup, viewers. Have a great day ahead.